So we're gonna go back to a very nice directional week, and obviously there's very nice movements in here, but I just want to focus solely on 1 week here. Okay, just noting and annotating how many times did our personal model perform. So we have here, I'm going to be covering Monday, Tuesday, Wednesday. Okay, Thursday was a bank holiday, so we'll skip that. And then Friday. So we're going to come through here and we're going to find how many times did our personal model perform. Now, we are only working with 4 days out of this week, but it still holds true and it's valid with a directional week here. We're going to look and see. So we always start on that daily time frame. Okay, I don't drop down to the lower time frames unless I see, the daily time frame and works. But from the daily time frame coming into this week, do we have ourselves, an edge on this daily time frame? Are we reasonably able to anticipate where this thing is going to drive to? Well, if you watch my other mentorship video covering this daily time frame price action, you will know that answer is absolutely yes. Order flow, continuously bullish. Zero, and I mean absolutely zero signs of any type of, sustained bearishness still coming through this week here. Right here, we come down and pierce significant daily sell side liquidity for the first time, and then we create a swing low. Anytime you see a swing low formed after a key, and especially on the daily time frame level, sell side liquidity is tagged, that's significant. We come up, come back down, work in this down close candle here, and we close above the midpoint of it, which is key. And then we create another swing low on after Monday came down. We opened, slammed lower, came back up, closed, and we have created this failure swing here. Now we do have an SMT divergence, which you can find in your own time, where ES actually swept this low here. So we now have smart money accumulating, and what was left right here? These relative equal highs. So this is going to be our primary focus until both of these highs are reached. So I'm going to go ahead and mark this out. And how many trading days do we have until we reached this key pool of liquidity residing right up here at all-time high? How many days? Well, we had Monday, Tuesday, and Wednesday. So every single day, Monday, Tuesday, and Wednesday, what are we expecting? Well, obviously, typically on a bullish week, you want to see that low formed on Tuesday, but in this case, it formed a little bit early on Monday, and we're reasonably able to analyze that with how we swept sell side here and created that SMT divergence. And then Monday slammed down, came up, closed. So Tuesday, what are we looking for? Bullishness. Wednesday, we have yet to take the high. What are we looking for? Bullishness. Okay, so with that in mind, we have daily time frame on our side. Let's go down to the lower time frame. Okay, here's Monday, and I'll go ahead and use the replay tool to get back there. Okay. So it doesn't look like there's much going on, right? But let's go in and see if our model actually did present. So we have the midnight opening here. Trade well beyond that to do what? Well, this here is internal sell side liquidity, right? So that's been swept from the marketplace, and we created that SMT with ES. Okay, now that we have that, let's go on to the 15-minute time frame. Okay, London, we more so want to classify this as a consolidation. It looks directional, but pretty much this range in here is all consolidation coming into the 9:30 opening. So we come into the 9:30 opening and we see a slam down into the internal sell stops and failure swing on the daily time frame that I mentioned. Okay, and we come down and we create the low of the week at that key level on the higher time. What I can say here is I'm not sure if my model did present today here. We'll have to find on the lower time frames, but all I know is this is a classic Judah swing that I look for in a lot of my trades that I do take. So let's go and drop down another time frame. Looking at this price action here, does it look absolutely favorable? Although the signatures are there, does it look favorable for taking trades? In my opinion, there's a lot better days that we can definitely be executing on. Lots of back and forth here, and you can definitely get stopped out very easily, especially if you're having tight stop losses. Let's go to the 1-minute time frame. Okay, so obviously we have that 9:30 Judah swing comes down, and then we create this short-term low at the 9:50 macro, and then what happens? Well, we slam up, come back down, take out the short-term low, and then we come the whole way back up above this high, and then we consolidate, come back down, consolidate, come back up, consolidate, and ultimately just gradually build up here. So to answer it in short, no, this is not one of my models. This is not something I would like to trade, especially with me having a 5-handle stop loss, 10-handle stop loss on NASDAQ. I would like to be in a lot more precision elements of in terms of price movement. So we can go ahead and classify Monday as a X day. So no, the model did not present today. So it's one day where I would simply just not be trading. Okay. And here is when things are gonna begin to become interesting. Let's come to Tuesday here. We still have that daily draw on liquidity right up here. Okay, this is still the main focus. We're gonna be looking for longs today. So what do we expect coming into today? And by the way, we don't even need any of these highs to be taken out on Tuesday here to profit well on the longs. Because I mean, look how much room there is in here. Okay, we can simply target the rejection block right here, extend that out, midpoint of the wick. But ultimately, the magnet that's pulling price is that daily time frame draw that we delineated in the beginning of this video. So hourly chart, okay, we always find our midnight opening firstly. Okay, London, we open, okay, trade up a little bit, but then ultimately we slam down into what? What's this right here? This here is a bullish order block, and we take the midpoint. Do we close above the midpoint? Yes, indeed we do. Do we create a swing though after touching midpoint? Yes, we do. On the hourly time frame, that is significant. Now, there's something else to note here. Sell stops, are they taken? Yes. Slam down here, take sell stops. Again, below the midnight opening, take sell stops. Down again. So, below midnight opening, we are now oversold without an indicator. And we're beginning to form the early stages of a bullish power of 3. This is all small little confluences of my model. So, we might just have my model here today. Let's go and find out. Let's go into the 15-minute time frame. Okay, so right here, London session with that swing low on the hourly time frame. This becomes an intermittent term low. Okay, as soon as we touch that midpoint and create that swing low, that's an intermittent term low. So we have a swing low here, higher swing low to the left, higher swing low to the right, and then we have that expansion higher, creating a market structure break above this high. This is not a run on liquidity. Okay, this is a market structure breaker. And what I mean, obviously there's sell stop or buy stops being taken when we go above this high, but what I mean by that is this isn't a turtle soup where we come up and then we're going to reverse. No, this is a market structure break towards that daily draw on liquidity. Remember, what is that magnet pulling price on the higher time frame? So you always want to keep that in mind. So I'm seeing this as an expansion in my favor, giving me that clue that I am going to be on the right side and still looking for longs. Well, what do we do here? We expand and we create a fair value gap, and then we retrace back down into it. Looks like my model may be performing here. Let's go and find out in the lower time frames. Okay, so now that we have that delineated, we have a 15-minute level to key off of. Okay, we have that market structure suggesting higher pricing. We have intermittent term low. Okay, and now we have expansion in our favor. So this is where we look for that retracement and find our entry. So 5-minute time frame. Do we have a run on sell side liquidity after this expansion? Okay, at the optimal time of day. Yes, indeed we do. And what I mean by optimal time of day, what's our kill zone? 8:30 to 11 p.m. So we're within that kill zone. And now we have a run on sell side liquidity after everything is looking in my favor for longs. Okay, so now let's go ahead and drop down to the 1-minute time frame. Within the kill zone here, we have absolutely everything in our favor suggesting, okay, this is my model. And looking back on this back test, we would put a green check mark for this day because this is a day where I'd absolutely be taking a trade. Now, we come down, we take sell side liquidity. We have engineered buy stops up here. Okay, we come down, failure swing, and then we displace higher right here. Here's a bullish order block, trade down into that. That right there is my model. So let's say I get in at 20,049. Where's my sell stop going to be? Right below this candle right here. Okay, so I'd likely be using 5 to 6 micros on a trade like this, since I'd have to open my stop up a little bit past 20 handles, which typically I don't like to do on NASDAQ. But this here is absolutely my model, and I can absolutely reasonably execute on this. That goes according to my risk management plan. Okay, so we can go ahead and put a check mark on this. Now, as a bonus, 5-minute time frame actually offers another entry. Okay, we move away from this consolidation after all the work has been done below the 9:30 opening, and then we come up. Okay, shifts above the highs here, back down into this fair value gap and this bullish order block. That right there is another long you can take in the direction of that daily draw. Okay, so check mark on Tuesday. Okay, let's write this down. Okay, now let's go ahead and we're gonna go to Wednesday here. Okay, so coming into Wednesday, we understand that we still have yet to get to that daily time frame draw. Okay, this is the magnet that is still pulling price. We're still bullish until this level is reached. We already derived this on the daily time frame. Okay, we already know our bias. It's just a matter of, is the market's going to move algorithmically at the right time of day, and does time and price align? And does our entry model present that allows us to have a sound stop loss? That's all it is. Okay, now let's go to the hourly time frame. So once again, we're still, okay, I is still here. Matter of fact, just to exaggerate it here. Let's go ahead and put the magnet here because this is the magnet on price. We come into Wednesday, same exact thing. What are we looking for? Bullish power of 3. So what do we want? Here's our opening. Do we trade below the midnight opening? Yes, we do. Boom. This is already looking like a very high probability day. Now the key here is already covered the things down here, but basically we failed to get to a discount array. So that actually adds to the speed to the upside. So the fact that we failed, so the key here is it's not just we failed to get to it, okay, we should see more speed. No, it's the fact that we traded below midnight opening, cleared sell side liquidity, and failed to get to that discount array. That right there is literally rocket fuel for price to get into that daily draw. Okay, so everything is looking in our favor so far on the hourly chart. Now, after sell stops are taken, do we have a change in the state of delivery? Well, we create this down close candle here. Right after that, what do? We open, fail to get below that hourly low, and then expand explosively higher above the opening here. That right there is a change in the state of delivery. What do we do after changes in the state of delivery? We seek buy side and buy side. Okay, that's all the market is doing here. So everything on the hourly chart, higher time frames in our favor. Similar to Tuesday, we now get this expansion coming into our kill zone. Okay, so once again, let's mark out our kill zone. So we have 830 to 11. Okay, here's our kill zone. And within that kill zone, we get an expansion in our favor. And now what? Similar to Tuesday, we're still bullish. There's nothing, we're not looking for reversals after the high is taken. That's a rookie mistake that a lot of people make. We come above this high, breaks in structure. Now we have market structure in our favor after this. So we form an intermittent term low. We have expansion, creating a market structure break. Now we have market structure in our favor on the lower time frames. Everything is coming together here beautifully. Do we create a fair value gap? Yes, we do right here. Beautifully. Now, this right here for higher time frame traders, this right here, this is enough for them. They're taking the long rate in this 50-minute balance. But with my risk management plan, I typically do not execute on the 50-minute time frame. It's usually 5 minute down to the 1 minute. So 5-minute time frame. We have everything. We don't need anything more now. Okay, we have every single moving piece that we can possibly need for a trade. Now all it comes down to is there an entry point with a sound stop loss? Well, I see one on the 5-minute time frame right now. The one I actually executed on was the 1-minute time frame, a little bit lower. But on the 5-minute time frame, what happens? Looks like pretty low probability action here, doesn't it? But ultimately, we consolidate. And out of that consolidation, we expand, creating an imbalance here. And what do? Trade down to it. Is this a long right here? Can we long this? Well, let's look at it. Trade down to the fair value gap. Let's say we get in at 20,293. Okay, where does stop loss go? Right below this candle here. Is that reasonable? Absolutely. I'm taking this long every single time. And where's our take profit? Right at that daily draw on liquidity. Very, very simple. So you can go ahead and put a check mark for Wednesday. This is now 2 days in a row where the model did perform. Now, as a bonus, similar to Tuesday, there was actually 2 high probability entry points on different time frames. So the 1-minute time frame, that's right here. Okay, right down to this. After this market structure shift, here's the fair value gap. Boom, there's an entry point. So Tuesday, absolutely a check mark. Okay, so let me go ahead and take a picture of this, and we're gonna go ahead and put that in. Okay, now the only bad thing about this week is that we had oddly placed bank holiday. Okay, so right after this is Thursday. So we're not going to focus in on that. Now we're just going to jump straight to Friday. Does our model perform? Well, let's go ahead and find out. So Thursday consolidates. Okay, trades down. We have this imbalance created now. Okay, note how the bank holiday actually traded down to it. And if you take a very close look, you're going to see this tiny little run on sell stops here within the imbalance. And then we move away from that. Okay, Friday, here's our news driver, a lot of back and forth here. And we've already taken the draw on liquidity, right? But really, all the signatures in here still indicate a continuation on bullish price action to me, especially with this consolidation here on Thursday, a little run on stops. Okay, coming into Friday, same exact thing that we look for on the other days. Here's our midnight opening. Okay, news driver slams below the midnight opening, as well as this balanced price range right here. And then from there, we go to the lower time frames. Okay, same exact cycle here. Now we're going to go down to the lower time frames, and we're going to see, does our model perform? Well, let's go ahead and find out. Now, keep in mind, the daily objective has been hit. There's no need to be aggressive today, okay? The 2 days that I annotated that had check marks for our model performing, that's more than enough. Like, when it comes down to it and it's simplified, really all you need is one respectable setup per week, okay? And that is more than enough for consistent profitability. But here's our 8:30 opening here. Here's our news driver. A lot of back and forth here, and definitely a lot of accounts blown on this day. And I don't say that with, you know, arrogance. It's just the truth, and that's just the reality of, you know, the space here. But here's our news opening. We slammed down, well, like I said, into the balanced price range. Immediately respect that, come back up and close the whole way up here. And then we create this hourly, or sorry, this 15-minute intermittent term low. And we move away from that. Now let's go dig deeper. And by the way, this right here, an SMT divergence was created. You can go ahead and find that in your own charts. We have a discount array tapped. Are we below the midnight opening? Yes, we are. What do we do below midnight openings? We accumulate long positions. On the 5-minute time frame, do I see a high probability entry point? No, absolutely I do not. Okay, nothing in here is something that I would take with my model and, you know, really just be confident with my stop loss and my risk management plan. Okay, so yes, we have all the signatures on the higher time frame that support a bullish entry point, but so far we do not see anything that I would actually want to enter on looking back on it, even in hindsight. Okay, so remember, intermittent term low formed from a discount array. We expand higher, slam down, engineer the buy side liquidity here. Okay, retail sees this as a really good resistance point. These are all-time highs right here, and you know, 90% of the time that's going to be upset and slammed through. So we now have short-term narrative to be able to take along. Yes, so let's go down the 1-minute time frame. Does it give us a reasonable entry point? Well, let's find our 9:30 opening. So we understand we have this news opening here. Okay. But on news openings, I'm still referencing the 9:30 opening. I still want to recalibrate at that 9:30 opening. So where is that? It's right here. What does the 9:30 opening do? We trade higher and higher to do what? Engineer buy side liquidity at that opening range. And what do? We now trade back lower below the 9:30, not only the 9:30 opening, but also the 8:30 opening. What do we do below those openings? Accumulate long positions. Now, along with that, what else do we do? What's this right here? This is short-term sell side liquidity taken from the marketplace. So this right here is valid. We've sell stops taken right here. Let's take our range. Are we going to discount? Okay, this is our dealing range. Yes, we actually trade straight to equilibrium. So not only are we reaching into fair value, we have a run on sell stops and we're below both openings. So we're oversold without an indicator, and we have engineered buy side liquidity where everyone wants to see this. You know, the average retail speculator, this holds a strong resistance level at the all-time highs. Now, we come up and we start expanding and closing above opposing arrays such as this imbalance and this bearish order block right here. So we now have that expansion above of everything that we like to see within our model. And then what do? Trade back down in this imbalance right here. See that? Is this a valid entry point, and is this a part of my model? Absolutely, yes it is. We have a run on sell stops. We're below the openings. Market structure in our favor. Order flow on the higher time frame still bullish. We had that higher time frame SMT divergence, and then it comes back down into here with everything that I just said. I'd be longing this. Stop loss below the low. Okay, stop loss 40,000 or 20,430 and a half. Entry point 20,458. So that allows us just under a 20 handle stop loss. So that is valid. This is where I'd be longing. Okay, you want to take partials above the high and then maybe hold a runner for a little bit more. But ultimately, Friday is a check mark. Okay, so let's go ahead and take the picture here. So this is a pretty good week. Literally, we had a bank holiday Thursday, so that automatically cancels out. But even with that, we have 3 high probability entry points that results in my model. Now, keep in mind, this can be completely, and I mean completely different for you. You can have, you know, trade whatever you trade, and you can maybe have like 50 opportunities this week. I don't know. If it's making you money, who am I to say anything, right? But when it comes down to it, my model performed 3 times this week, and that is absolutely more than enough. I don't need any more than that to make a lot of money, guys. So I hope you guys enjoyed this, found insights out of this, and I'll be seeing you next week. Alright guys, so I just wanted to get back on here quick just to close up the video the correct way and to show you guys how much money we really would have made if we executed, you know, to perfection on the 3 times that the model did present this week. And that's assuming that you weren't impulsive, you weren't over trading, you weren't over leveraged, and you follow the plan, follow the model, and you weren't, taking low quality setups. And it's also assuming that you have a great understanding of time and price alignment, right? And let's just say you took these 3 high quality setups. How much money would that have paid us? Well, I believe Tuesday was the first time it performed. Let's go ahead and check it out. So Tuesday, this is where I said we went long on the live stream, and it was, let's see, let's just assume that we went long 20,049. Okay, and let's just be modest and say we got it out the high here. So that would be approximately 57, we'll say 58 handles. So what's 58 times 25? All right, boom. So that's $1,400 right there. A little bit more than that, but we'll just say $1,400. 57 handles on the NASDAQ from here to here, okay, on one contract, $1,400. Okay, so there's $1,400 right in your account right there. Let's go to Wednesday. You're patient, you're not impulsive, you know the time and price alignment, you know what you're actually doing, you put in the work and you studied, and all of a sudden here's our A+ model presenting right here again. Let's say that we got in at 20,274. And obviously that daily draw on liquidity was here. We'd be holding on for here. So 20,274. Okay, so that'll be actually around 95 handles. So this was basically the biggest move of the week that we would have been a part of. And I mean, this is all you need for the week. 95 handles. I mean, that's way more than you really actually need. So 1,400, what's 95 times 20 handles? That's $2,375. And we add 1,400. You would have been up $3,775 as a reward for your patience and your diligent study. Now, you can just, I mean, honestly, you really should just call it a week here, because at $3,775 profit on the week, you're doing better than 99.5% of every other trader in this marketplace that can't conquer their emotions or whatever else is they're struggling with. But, let's continue on for a completion's sake and go to Friday. Okay. Here was the third model presented. Let's say we got in at 20,459, and let's just be modest here, and we'll say we got out at 20,496. Okay, so we'll just call that 45 handles. So, boom, just around $5,000 in the week you're up on your account. That's extraordinary compared to what everyone else is doing out here. And not that you should be comparing yourself, but just put it in perspective of being content with enough, being humble, and aiming for consistency and not very, very fast run-ups. But this absolutely is obtainable, everything that I showed you in this video. If you follow the model and follow the plan, this video should have opened your eyes up to what's really, really possible for yourself in the future. So hope this helped. I'll see you guys in the next tutorial.